Rudy, so just tell us, what do you do?
Well, good night.
Good
Thank
night.
you, Alva, for having me on your platform here. I'm really privileged and honored to be speaking here with you, Naomi, and your communications director from Barbados. Thank you so much, Naomi, for the information that you shared. I really wish I had you in my pocket because I just want to pull you out all the time and just say everything that you just said because it's so important in our community that we hear this. We need to go on a nationwide tour together and tell people this story because a lot of people are not aware of what they don't know, what they don't know. And that's the sad thing. So what I do is I actually work within the financial industry with Primerica Financial Services. I've actually been servicing my community for the past 15 years. Absolutely love what I do. I did not anticipate the difference that I would be making in people's lives with the education that we actually provide to families. I got into this because I was one of those individuals who grew up poor, didn't know anything about money. And I watched my parents work very hard, provide for themselves, put on the table every single day. But when they retired with nothing. And what I realized was that how many families think they're doing good because they're putting food on the table and they're putting a roof over their children's head. But later on in life, they don't know that they're going to need help in order for them to survive financially. So I've just been sharing my story with as many people as I can and what we do and how we can actually help in the community and teaching people just the basic concepts when it comes to their finances. Now, surprisingly, these are things that should be taught in school, but it's not taught in school. But we could probably have another conversation about why this type of education is not taught in school. But today, people have access to this information and so many different platforms, but still cannot break down how their investments work, how insurances work, how the markets work, how the mortgage works, how debt works, how credit card works, how what Naomi just talked about, preparing yourself as far as for trust, wills. These are all confusing. And for most people, they'd rather stick their head in the sand and just hope that everything will turn out fine in the end. And clearly that's not it. So that's what I've been doing all these years. And hopefully I can actually add something to this platform.
Okay, thank you for that wonderful introduction. I heard you said, and this is something I work closely with, you provide life insurance, otherwise known as income protection. Why would we call it income protection?
Well, there's a big confusion about how insurance works, especially when it comes on to life insurance. For most people, they think that life insurance is in the event if they die. Well, when you think about insurance in its entirety, insurance is basically, if we were to just take it down to um, a simple term, is covering risk. We have car insurance in case something happens to our car. We have home insurance in case something happens to our home. We have health insurance in case we get sick. Well, clearly we don't have life insurance in case we die because there's no amount of money that can actually replace your life. So what's the purpose of life insurance? It's to cover the expenses that a breadwinner would have left behind in the event of their passing. So then what are they really covering then? If they're not covering their life, then they're covering their income because that income that family loses when they lose that breadwinner in the household. So for example, if you have a father who makes $60,000 a year and he pays maybe probably the majority of the expenses and bills in the house, once he's out of that picture, that $6,000 is also out of the picture as well. The family would need an equivalent of money that would make sure that $60,000 was coming back to them every single year. That is where income protection would come in. because he would have either 10 to 20 times the amount of his income to make sure that his family can sustain the same lifestyle that he was giving them while he's alive. Because at the end of the day, a mother or a father, they still have a responsibility, whether they're alive or whether they've passed on, to make sure that their family can continue to maintain the same lifestyle or better after their passing.
Wow. Thank you. Thank you for that. Yeah, looking at it like it is to protect your family in the event something happens. Now, as I told you, many families present insurance policies to pay for the funeral. But sometimes when we check and families come and say, yes, I have an insurance policy. And then when I do my research, getting ready to present it to the funding company, we are blown away sometimes with families who have heard at that point in time that there's no money there, that mom or dad took out a loan. So tell me about that. Like, how does that work? Like, what would cause that? And,
Yeah,
it's very devastating to families. So can you shed some light to that?
yeah, unfortunately, people are actually sold on the idea that they can use insurance as a way to gain money back. And really, the advantage of an insurance like that is for the company and also the insurance agent, because it actually pays higher premiums, which pays higher commissions. So many individuals who do buy this type of insurance are not aware that this insurance is something that is operating more as an investment in savings that really is their own money that they're using. So, like Naomi said, if someone takes a policy out and they don't explain to their family who's the beneficiary, how the policy works, what they've done over the years with the policy. Eventually, when they pass away, now the family puts in a claim, and the insurance company then at that point explains to the family how it works. Well, if you just lost a loved one, the last thing you want to hear is that there is no money there, or your family member actually owed because they borrowed money from it. They're sitting and shaking their head like, I don't understand. This was a life insurance. What are you talking about? They borrowed money from it. What are you talking about? They owed money on it. It's a life insurance, isn't it? And it becomes a big misunderstanding that unfortunately leaves a distaste in the beneficiary's mouth about insurance companies, because here they're in an emotional state in their life. They need this resource from the insurance company to take care of expenses, and the insurance companies tell them no. So people should be very aware of what they're purchasing, and what's even more important, that they go and find out exactly the details of their policy, because they do not know the decisions that they're making today can affect the beneficiary tomorrow when they're putting a claim.
Wow, thank you. That is very good information. To know that you know, not it's not to say you have insurance, you have to make sure you have the right type of insurance. So that's very important. And a common question is, how much insurance should I get for myself?
Well, the rule of thumb is that you should have about 10 times your amount of your income. And the younger you can do this, the better it is, because it's cheaper at that time. But if you can't do that, you should have enough to cover your liabilities, that in the event of something happen, at least your family can pay off the major debts that's left behind by you in the event of something should happen to you.
Okay, thank you. And how would a person get started in terms of getting a policy that would cover all of their liabilities and leave enough for, a burial? What is the process?
Yeah, so sitting with a person like myself, what a person would first do is do what's called a financial needs analysis, so they could see the need of the amount of coverage, and also to look at the other areas in their finances to make sure that's taken care of. Insurance should just not be a process where you just buy it from a company, but you should work with a financial professional who will go thoroughly on how your policy work, how to affect your generational wealth that's passed down to the family in the event that something happened. Even to what Naomi said, life insurance could be something that could pass on to generations if left properly to the next beneficiary, either in a trust or in an investment. And of course, a person would have to make a decision on that based on if they're leaving it to children or leaving it to a spouse. But I think it's very important that they should have an analysis done on their finances to determine how much and what type they should actually put in place for themselves.
Wow. Thank you. Thank you. Thank you. I hope that my viewers have, sat and really taken this information, because these are some pain points, as I said, that I see every day. So thank you guys. Thank you so, so much for, providing this information. And I just hope, the aim is for us to do better for generational wealth. And, educating is the first step. And I hope that some of my viewers are inclined to do better and to put things in place. Crystal?
Rudy, how can we reach you?
That is a great question. I thought that was going to be asked. You could actually give me a
But you
call,
can
no
you can
problem.
say it because she will add it on. I'm
Okay,
sorry.
no
I was
problem.
just reading that she said 5
No,
minutes.
no, it's okay. It's okay. I'm very simple. Right now we're actually revamping some of our platforms, but you can call me at 718-344-1045, 718-344-1045. We are in transition and moving our locations in our office, so that'll be our best office line to reach out.